After months of negative sentiments, the Nigerian equities market is gradually gaining on the back of renewed buying interest in bellwether stocks by investors. Can the momentum be sustained as investors take position in dividend-paying stocks ahead of the 2022 dividend declarations? Olumide Sole, an investment analyst at PFI Capital, joins me for this discussion. Olumide, thank you so much. Pleasure to have you on the show today.
Thank you for having me.
What it would appear that we have an end-of-year rally at the equities markets. Talk to us. Let's take a few steps back from January up until now. It didn't seem like there was a clear direction of the market, and one can't blame investors with all that's going on: inflation, high interest rates, the Russia-Ukraine war. But here we are at over 12% year to date.
Okay, surprisingly, from January year to date, the Nigerian equities has recorded a very decent performance compared to its global peers, where we have seen sell-offs across the board due to hiking interest rates, inflation, and macroeconomic headwinds generally. But in Nigeria, you see that the Nigerian equities has sort of separated itself from the global peers in respect to its performance this year alone. And also, we have also experienced the same macroeconomic headwinds. For instance, now, the CBN alone has hiked rates this year alone by 500 basis points this year alone to be able to fight reigning inflation and so on. But as a result of that, we saw sell-offs in the equities markets, especially in October. And in November, the equities market has staged a comeback, or we have seen sustained bargain hunting in
terms of the numbers, because you and I were talking earlier, and as of October, we were just at year-to-date 2%,
yes.
But now, just a few weeks later, we're already at 12%. So from that time when we were at 2%, what happened? How did we get to 12% year-to-date?
Okay, buy interest in telecommunication stock, the likes of Airtel Africa and MTN, drove the bullish sentiment we have recorded in just few weeks, some previous few weeks that just passed now. Actually, I think the preceding week before this week, week that just passed, the equities market recorded about 6.88% week-on-week performance, and that was majorly on the back of buy interest in Airtel Africa, which gained about 14%, and MTN also, which gained about 5%, respectively. So because of that, we have seen the equities market be able to sustain its bullish performance.
So let's break down this buying interest.
Yes.
Exactly what are investors buying? You mentioned the likes of MTN, Airtel, but I'm sure there are more.
Banking stocks also.
Okay.
Because banking stocks have also suffered some sort of sell-off this year, and so as a result of that, we see investors now buying some of the stocks to be able to, at a bargain. The likes of Zenith has about dividend yield of about 15%, GT have dividend yield about 17%, and so definitely they are attractive offers for investors to be able to buy into.
So would you say that they had, because I know in the course of the year, a couple of them did take a haircut, they were a bit depressed. Yes. So would you say that at whatever point investors came in, they still were good re-entry point, especially for those who were going into the stocks for the first time?
Yes, yes. They were a very good entry point at 70% dividend yield, 15% dividend yield, and so on. Above 10% dividend yield, a very good entry point, very, very good entry point, and decent compared to global peers and also the markets generally.
So going forward, we're at over 12%, just a few, I believe, 3 weeks or so to the end of the year. Yeah. What are your projections? What are you forecasting? Should we expect some profit taken along at some point, or do you think this momentum will be sustained?
Yes, this momentum will definitely be sustained before the end runs out. But for the meantime, we're likely to see profit taking. Investors trying to lock in profits. Those have come in earlier when some of the stocks have not recorded buy interest. So definitely they would like to lock in profits and take advantage of fixed income, rising fixed income use in the fixed income market. So definitely that will definitely that will be the challenge to the bullish.
Well, we've seen yields rise in the last 2-3 weeks. It would appear that, or even much more than that, it would appear that equity investors didn't exactly pay attention to that. But why would that be an appeal now? Or why would that be appealing right now?
The higher the yields go, the more attractive they become. They are more attractive they become. Maybe they are definitely pricing in. They have definitely pricing in the opportunity cost and also some other factors to be able to determine which is more attractive. So the higher the yields definitely go, the more attractive they become.
Yeah,
so
well, fair point. What stocks do you like right now? What stocks are on your radar?
I'll be looking at the likes of the banking stocks with higher dividend yields, the likes of GT that have 17% dividend yield, Zenith 15%, and so on, and definitely.
What about the mid-cap stocks, maybe, or even the tier 2, some tier 2 counters, tier 2 banking counters? Fidelity, are those?
Yes, they are also recording decent performances. Well, so definitely I'll be looking at the likes of Sterling Bank, FCMB, and Fidelity. So for the tier 2 banks. While for consumer goods, I'm looking at the likes of Nestle.
Nestle, okay.
Nestle that is now at 52-week low, so definitely.
What about oil and gas? That sector had a bit of a rough patch this year.
Yes. So the oil and gas sector definitely has, this year alone, is about 48% year-to-date return. So it has recorded like the highest performance this year, and it's majorly on the back of higher oil prices due to the Russia-Ukraine crisis, which is definitely helping to keep oil prices high. So definitely, I'll be looking at the likes of Seplat and so on, just Seplat.
All right, Olumide, I must thank you for your time. Thank you so much for talking to us today. Pleasure having you on the show. Olumide Sole, an investment analyst at PFI Capital.